Good morning, Florida. Welcome to the February Real Estate Market Review for the Emerald Coast of Florida. I'm Karri.lindsey, Managing Broker with Brix Realty, and we're going to talk about three things today. We're going to cover interest rates, and there's been a lot of movement there, and then we're going to move into inventory, and then we're going to wrap up with a discussion on foreclosures. So interest rates, mortgage rates have been trending down over the last month, and that's a good thing. And we can say that confidently looks like it's a trend that's going to continue. As I'm recording this right now, rates ended last week just over 6.12. And we know that the average mortgage rate peaked in the first half of November above 7%. So as we see more good information come about regarding inflation, and as we go throughout the year, we should continue to see this downward trend continue. When we say that we see relief in interest rates, that means that there's going to be more demand. So if your home is priced right in this market, it should sell fast, and we are even seeing multiple offers again. When we think about rates, 7.5% to 7% is going to bring a weak buyer demand. 6.5 to 7, a limited buyer demand. But when we get into the range of 6 and 6.5, we're getting into good buyer demand. So when we break through that threshold, because 6 to 6.5 is kind of where we are right now. When we break into that threshold below 6%, we're really going to start seeing good buyer demand. And hopefully that's going to come right around spring market time. And so we'll see stronger buyer demand come back with that right as we head into busy season, which is fantastic. All right, let's talk about home prices. So I've said it before, I'll say it probably 100 more times. So price is always determined by supply and demand. And when we wrapped up December with 21 fewer new listings coming to the market overall as a country than the prior year, we're not seeing the number of listings that we need. As a matter of fact, if we look at this, a more recent number, and you look at January, where we finished up with new listings in this country, we're at lower than what we saw in 2020 and 2021. Here in Florida, new listings were down in the Pensacola area 22% and 33% respectively in the Destin area. And that is comparing December of 2022 to December of 2021. Pending inventory also down 41% in the Pensacola area and down 51.5% in the Destin area year over year. So 2022 versus 2021. Median sell price, however, was up. So in December of 2022, we were up year over year 3.4% in the Pensacola area and 3.9% year over year in the Destin area. So we had talked about in the previous months that the end of 2022 and going into 2023, the appreciation would probably stabilize a little bit and we wouldn't see these crazy price appreciations happening where we were at 20%, 30%, 40% in some of our areas here. So again, year over year for December, we saw 3.4% appreciation for that last month. And I expect that we'll probably be in the 3 to 5% range for 2024 or 2023, excuse me. So there are several reasons for that. And so sellers, as far as why our listings are lower, sellers that have been in their home probably have a low interest rate, and so they don't want to lose that low interest rate. So they don't want to put on their house on the market because they know that they're going to be paying in the sixes. The other thing is, because of the low inventory, they may be thinking, where am I going to go? Like, am I going to even be able to find a house even if I want to sell? So the good news for sellers, interest rates are coming down. I expect that listings will increase as we head into the spring. And again, as we head into the spring, there's going to be more buyers. So those are some really great things, in addition to all of the equity that's been accumulated by sellers over the last 2 to 3 years. So those are great things for sellers. But the bottom line is we need more listings. We need more homes to sell. So if you look at what is happening and the dynamics that I'm speaking of today regarding our real estate market, we're not seeing a flood of inventory, and we're definitely not seeing a flood of foreclosures. And so that is keeping the upward pressure on home prices. So as rates lower and more sellers list this spring, which is typical, we should be moving back into a good to strong market. And those are indicators that would be we're going to have a good, healthy market for the spring. Okay, so let's wrap up and talk about foreclosures. So there have been a lot of headlines recently saying U.S. foreclosure filings surged 115% in 2022, and U.S. foreclosure activity doubles annually, but still below pre-pandemic levels. And then another one I saw was foreclosure filings rose 115% in the last year. And so while all of those headlines are true factually, they don't necessarily give the entire picture of what's going on in the foreclosure market. So let's dive into the foreclosure filings, the default notices, and the scheduled auctions and bank repossessions. So for 2022, there were 324,237 U.S. properties that were foreclosed upon in 2022. And that is up 115% from 2021. So that's what you saw in the headlines. But what they didn't tell you is that that number is down 34% from 2019 before the pandemic shook up the market and kind of made things all go crazy. So you didn't see that in the headlines. And what they also didn't tell you is that foreclosure filings in 2022 were also down 89% from a peak of nearly 2.9 million foreclosures in 2010. So 2008 was the crash, and then we followed that period of time with record number of foreclosures. And so we're really nowhere close. And the market that we're in right now is completely different. So if you look at U.S. properties with foreclosure filings, and let's go all the way back to 2005, what you can see in those dark red bars is that there were years where we had over 1 million foreclosure filings per year in our country. And so we went from nearly record lows of foreclosures in 2021 to an increase in 2022. But in 2010, we had 2.9 million. Right now, we have, and over the last few years since that market crash in the 2008 timeframe, we have a much more qualified buyer now, and we have far more people who are applying for mortgages, and they have to go through strict qualifying criteria in order to be approved. So there's no loan funny business going on like there was beforehand. We have mortgages with buyers that have much better credit history. So we're not anywhere near even a normal year when it comes to foreclosure filings in this country. And so that's a good thing. As far as Florida specifically is concerned, lenders started foreclosure processes on 248,170 properties in the U.S. in 2022, which is up 169% from 2021, but it's 26% less than what we observed in a normal year in 2019. And while lenders repossessed 42,000 plus of those properties through foreclosure in 2022, that's an increase of 67% from 2021, but down 70% from 2019. So the bottom line right here, and what we're talking about, is where we are right now with the foreclosure market is a very different experience than where we've been in the 2008 to 2010 timeframe, and then even from 2017, 18, and 19, which are our most recent normal years. So again, the forbearance program that the government issued gave people time and a space to be able to get back on their feet. Mortgage companies were willing to work and still are willing to work with sellers to avoid home ownership and not have to worry about foreclosing on their homes. We have a relatively still strong economy when it comes to the real estate market. And so the equity that people have built up over time has given them the opportunity to sell their home if they were facing foreclosure versus actually going through foreclosure. And it's really important to have this context of what we have discussed today to understand why this market we're in now is different and that we're not headed for a real estate crash. The data simply just doesn't support that. We're in a market that is adjusting to the craziness of the pandemic and the post-pandemic era to a more normalized, stable, realistic market for both buyers and for sellers. And that's actually a really good thing. So I know I kind of covered all of this quickly, but if you want more information, if you have any additional questions, please reach out. I'm happy to help. I'm happy to answer anything that you can throw at me. Let's connect. Hope to hear from you soon. Have a great day.